Welcome back, accounting students. This is Mrs. Bloomquist, and we are all the way up to Chapter 15. Chapter 15 deals with preparing adjusting entries and a trial balance. Now, remember way back several chapters ago when we did essentially the first half of the book, we looked at a sole proprietorship and we prepared the financial statements for a proprietorship. And we went ahead and did a worksheet and some adjusting entries for the service business. Well, now we're going to be doing this same general concept of the accounting cycle with a corporation. So we're going to be doing the adjusting entries and the trial balance information so that we can go ahead and generate some financial statements for our corporation. So that's where we're headed. And one of the things we want to consider is that there are some accounts that don't have accurate balances at this point of the accounting cycle. And so we just want to remember, you know, when we were working with our sole proprietorship, we did make some adjustments for things like supplies and prepaid insurance. And so we definitely want to make sure that we accurately post some adjusting entries to reflect where our accounts are at this point. Now, we want to make sure our records are accurate because we're going to use this information to generate some financial reports, and we want to make sure that those financial reports are good, are accurate, so that when the business is making management decisions, they have all the best information on hand. So as we look at Lesson 1 here in Chapter 15, we're talking about preparing an unadjusted trial balance and then adjusting for supplies and prepaid insurance. So those are the things we're going to be looking at. We definitely want to just remember some of our accounts need to be brought up to date before we can prepare financial statements, and that we use adjusting entries to bring our general ledger into a current situation. So the very first step in preparing adjusting entries is to prepare a trial balance. So a trial balance is prepared before the adjusting entries, and this is called the unadjusted trial balance. All right, so now I'm looking at an example here of the unadjusted trial balance, and you can see that I've written all of my account titles in, and you can see whether I'm looking at debit or credit account balances. Once I get to the bottom of my unadjusted trial balance, you can see I'm going to total, which is the single line right here. And then I'm going to prove, so I'm going to make sure that this is going to be equal to this. And then I'm going to go ahead and rule the total columns so that you can see that my debits equal my credits. And once I know that they're equal, then I add the double line at the bottom. All right, so 4 questions that we ask to analyze adjustments for supplies. What are the balances for the accounts being adjusted? What should the balances be for those accounts? What must we do to go ahead and correct the account balances? And then what adjusting entries need to be made, or what adjusting entries are going to be made? All right, so you can see that we're going to be looking at the supplies expense for our office, our supplies, and then our supplies expense for the store. And then we're looking at supplies that are store. Okay, so we just want to make sure that we are comfortable with the fact that one of these supply expense is for things that are in the office, and one would be representative of things that are in the store. And you can see what we have expensed and then what we have on hand at the end of the year that has not been used. So you can see where we're going to be looking at these adjusting entries. We're going to debit the supplies expense for the office, and then we're going to go ahead and credit the supplies expense for the office. And you can see that those amounts are the same, and we're going to do the same for the store expenses. So you would just want to consider what we're looking at here is the amount is the cost of office supplies that were on hand at the beginning of the year, plus any supplies that we purchased, and then we adjust to reflect what is actually on hand at the end of the year. So we know we had some stuff, we bought more, we used some things, and we want to make an adjustment to accurately reflect what we actually still have on hand at the end of the year. And we're doing that for both the office and the store category of our supplies. Okay, so as we're recording the adjusting entry for prepaid insurance, we also need to think about what was the balance that we had on hand that was prepaid at the beginning of the year, and then how much of that insurance have we actually used over the course of the year. So as we're looking at the insurance, we're going to see that we have insurance premiums that were paid in advance, and then we use some of them up over the course of the year. So you can see the recording for this adjusting entry for the prepaid insurance. We're going to go ahead and debit our insurance expense, and then we're going to credit our prepaid insurance. We just need to make an adjustment to reflect the fact that we have used up some of the insurance we prepaid for. Okay, so we are now at the end of the lesson. Which adjusting entry is unique to a corporation? And we would say federal income tax expense is something that's an adjusting entry that's unique to a corporation. What 4 questions are used to analyze the adjustment of an account? And these are really important. You want to make sure that anytime you think you need to adjust an account, you ask these 4 questions. So, what is the balance of the account that's being adjusted? What should the balance be for the account? What do you need to do then to go ahead and correct the account balance? And then finally, what adjustment is made that's going to go ahead and correct the account? Which accounts are used for the adjustment to office supplies? Supplies expense for office, and then supplies for office. Which accounts are used for the adjustment to prepaid insurance? Insurance expense, and then also prepaid insurance. And you're going ahead really and just saying, hey, I know I prepaid for this, and once I have actually used it, I record it as an expense, and then I go ahead and reduce the amount of prepaid insurance that I still have on my books. All right, so that was the end of lesson 1 for chapter 15, a real quick short lesson. Go ahead, please, and do the forms for chapter 15 and the work together and on your own in Aplia. Thanks and good luck.